Hello friends, in this video, we are going to decode a very important notification issued by CBIC on 4th of August 2023. This notification is very critical in terms of GST compliances, and each paragraph of this notification is to be understood very seriously. So welcome friends to my YouTube channel. I'm Vinod Kaushik and let's begin the discussion. And today our discussion will be limited to Rule 88 capital D, which is talking about reversal of excess input tax credit taken between two GST forms, that is GSTR-2B versus GSTR-3B. So let's go straight to the notification, the specific part, which is talking about the reversal of input tax credit. So Rule 88D is basically a new rule which is inserted after Rule 88C. And as you all understand that GST input tax credit is nowadays is strictly regulated by government. It is strictly regulated by government through Section 16 subsection 2. Section 16 subsection 2, the small a, double small a, was implemented or enforced with effect from 1st of January 2022. And before that, we had a concept of GSTR-2A via Rule 36 of Rule 4, which was introduced with effect of 9th of October 2019. So friends, 88D, we are going to decode this particular rule word by word, just to understand that what will be its implications. So first point to understand is that Rule 88D is inserted by this notification 38/2023, and there is no specific date mentioned in the notification for its that from which date this rule will be enforced. In various rules in the same notification, the specific date is mentioned that this rule will come into effect from 1st of October 2023. So you can see the paragraph number 11, it says that this in the said rules in rule number 67 will effect from 1st day of October 2023. So you can say that this amendment in 67(2) is to be enforced with effect from 1st day of October 2023. Now, my rule which we are discussing is that paragraph number 12 says that in said rules, then in the CGST rules, after Rule 88C, that is, the following rule shall be inserted, that is 88 capital D. So the date of its enforceability is not mentioned in the notification. So I assume, or we assume, that if no specific date is mentioned, then it will be enforced with the date of issuance of the notification. So the enforceability of 88D is 4th of August 2023, because 16(2)AA is very well implemented or enforced. So what 88D is talking about, friends? 88D is giving us a procedure wherein the system will auto-generate some mismatches on account of 2B versus 3B. So let's understand again that a taxable person is filing a return on monthly basis, that is GSTR-3B, and in that return in table number 4, that taxable person is claiming input tax credit. So the rule says the amount of input tax credit availed by the registered person in the said tax period furnished by him in 3B exceeds the amount which is available in GSTR-2B. In respect of the said tax periods or periods, as the case may be, by, this is very critical, by such amount and such percentage as may be recommended. So as on date, we don't have the percentage or the amount which has been recommended by the council. Suppose the percentage can be said 10%, it can be 20%. In those cases, this DRC-1C Part A shall be generated. Suppose, let's take an example. I have taken input tax credit of ₹100 in my GSTR-3B. But in my GSTR-2B, the input tax credit of ₹80 is available. So technically, I have taken input tax credit which is in excess of 10%. So 80, the 10% becomes ₹8, that 88. Maximum ITC, if the percentage is prescribed as a 10%, then it could have been ₹88. But since I have taken the input tax credit of ₹100, so in this case, this is a hypothetical situation. We are just assuming that government is prescribing the percentage is of 10%, or the amount can be any amount that the council can recommend. So if the percentage comes as 10%, then if you are taking input tax credit in excess of 10%, then in your case, a statement shall be generated in DRC-1C Part A electronically on the common portal, and that will be uploaded on the portal and it will be given to your email address. And you are required to take two actions on that statement which is generated in Part A. The first action is either you can accept that difference and pay, or reverse the amount of input tax credit along with interest under Section 50 at the rate of 18%. And if you don't agree or you disagree with that statement in Part A, you can furnish your reply accordingly, explaining the justifications of the differences in ITC on the common portal. But this has to be done within a period of 7 days from the date of generation of this Part A of DRC-1C. So if you pay that amount, this is full and final, nothing need to be done. It will be accepted. No recovery shall be started under 73 or 74. But if you have disagreed to it, or you have not replied to it, or if you have replied but the officer is not satisfied with your reply, then in your case, the recovery of taxes can start, or recovery of excess input tax credit can start under Section 73 or 74, as the case may be. And a show cause notice in DRC-1, before that, there may be a draft, like there may be an intimation, draft intimation of the demand. Then a proper show cause notice can be issued in DRC-1 along with the SCN, and then the entire process of adjudication will start. So this is a very, very important amendment in GST rules, which will impact a lot to those professionals who are day in or day out dealing with the compliances of GST, GSTR-3B, etc., GSTR-1, etc. So it is very, very important to understand this rule. With these words, I'm concluding this video, and I hope this was useful for you in your professional endeavors. Thank you very much for